The rapid-fire bidding wars that once defined Utah's real estate market have come to a sudden, quiet halt. After years of homes disappearing in days for tens of thousands over asking price, properties are now sitting on the market for weeks. This explosion began when high-earning remote workers fled expensive coastal states like California and Washington. They were drawn by a specific combination of factors: modern infrastructure, a burgeoning tech sector, and immediate access to the outdoors. Look at this chart. For a 3-year window, the sheer intensity of housing demand meant that many homeowners passively gained more wealth through equity than they earned from their actual salaries. That momentum has stalled. Walk into a Utah open house today, and you'll find a much quieter reality. Sellers who previously held all the leverage are now issuing price cuts in an attempt to attract a shrinking pool of buyers. This shift raises a critical question for the national market. Are these price reductions the first sign of an impending collapse, or do they represent a rare window for strategic entry? To find the cause, we have to look toward the Federal Reserve. As inflation began to climb, the central bank aggressively raised interest rates to cool the economy, effectively ending the era of cheap mortgages. This visual shows the mechanical impact on a typical home loan. Even with the sticker price of a house remaining the same, turning up the interest rate dial increases the monthly payment by hundreds or even thousands of dollars. This sudden increase in the cost of debt removed thousands of potential buyers from the market almost overnight. Sellers who once dictated every term of the sale suddenly found themselves with 0 offers. Utah remains a highly desirable place to live, but the frenzy was fueled by borrowing costs that no longer exist. The market is cooling because the financial math for the average family has changed. Look at these active construction sites. While rising inventory is often described as a sign of failure, it actually functions as a release valve. This new supply is bringing the market back to a sustainable baseline after years of artificial scarcity. This shift gives buyers a level of leverage they haven't seen since the 2010s. They now have the time to negotiate on price, request repairs, and complete full inspections without the fear of losing the home to a higher bidder. To understand the true state of the market, you have to ignore statewide averages and look at micro-markets. High-performing school districts and tech-heavy corridors are reacting very differently than rural or overbuilt suburbs. In areas like southern Utah, the combination of commercial density and job growth continues to sustain demand. These specific hubs have economic foundations that remain resilient, even as other parts of the state experience a sharper slowdown. Broadly categorizing the entire state as crashing ignores these pockets of strength. The current market rewards those who can distinguish between a temporary price correction and a long-term economic shift. During the pandemic, the sheer speed of appreciation meant that almost any purchase was profitable. Today's market requires a much more analytical approach, where success is determined by localized data rather than broad market momentum. Utah's geography provides a permanent cap on supply. With massive lakes on one side and impenetrable mountain ranges on the other, there is a hard limit on how much new housing can be built. This physical restriction provides a long-term floor for property values. However, the lack of rapid appreciation means there is no longer a safety net for bad decisions. Overpaying for a property in a declining neighborhood is now a mistake that could take years to recover from. The speculative boom is over, replaced by a balanced environment where buyers finally have choices. Success now belongs to those who use this slower pace to perform better due diligence and negotiate harder. Entering a market while others wait for better headlines is how investors capitalize on localized corrections. With timing and research, this cooling period provides the entry points that disappeared during the frenzy. Would you buy in Utah right now, or wait? Let us know in the comments and subscribe for more deep dives into the changing American economy.